Welcome to the Profitable Cleaner podcast. Join your hosts, James Harper and Angel Sandoval, bringing you the experts, discussions, and knowledge you want. We talk about sales, technology, marketing, operations, strategy, leadership, mindset, health, God, and so much more. Now, are you ready to profit?
All right, what's up, everybody? Welcome back to the Profitable Cleaner. Today we have an awesome guest. As we've been telling you, to start up these episodes, we're going to start bringing you both speakers and our roundtable leaders. And today we get the honor of introducing a roundtable leader that's going to be talking about access into funding, credit, anything that you need to be able to grow your business. So today we get Eli Stanley, Senior Vice President of Business Community Banking down at Vectra Bank. Eli, bienvenida al podcast. How are you?
Oh, gracias. Thank you. Thank you for having me. Happy to be here.
James, how you doing, brother? Nice to see you again.
I'm doing really good, man, and I'm super excited for today's show. I'm always excited for roundtable leaders that we're interviewing, but I had the chance to meet with Ellie a few weeks ago, and it just had such a wonderful conversation. I think there's energy givers and energy takers in every conversation you have, and I left that conversation, Ellie, with you last time. Like you gave me energy, which I'm so excited for the knowledge and energy and information you're going to provide everyone at our event in September. So we're honored to have you. Thank you so much for being with us today.
Thank you. I'm excited too.
For those that don't know you, 30-second spiel. Who's Eli Stanley? Let them know.
Oh, Eli Stanley. I'm the Director of Business Banking here at Vectra Bank. I've been here for about 9.5 years. I've been in Colorado, I think, long enough to say I'm from here at this point. I have been here since 5th grade, so I feel like a local. We expand. We're a sister company of Zion's Bank Corp, and so we expand to the different affiliates that we have across California, Texas, Arizona, Utah, Colorado, a little part of New Mexico. So I'm here to answer questions. I've been in business banking. It's my passion. It's what I do. I look to serve the customer and the business owner, and so yeah, I'm excited to help you out. Happy to be here.
I love it. I'll kick us off if that's cool with you, James.
Totally.
What are like three myths that people have about banking and regional banking? Because I'll be honest, even myself, I'm Mexican, so put the money in the mattress and put it
Yes.
anywhere except the bank. And then when I finally said, no, I need to put it in a bank, I started using Chase and stuff. Nothing against national, like big corporations, but there is a beauty to regionals, right? And so my question to you is, what are some myths that people might have right now so we can just attack those?
Well, I think right now the volatility of the banking industry and regional banks is on the forefront. And I think that it's okay for people to be alarmed, but not be scared. I think the media has a lot to do with what the sky is falling. I think that we've been through some of these cycles before. I laugh because I have some bankers who are just new to banking, and this is the first time that they've been in any sort of volatility of the bank. And then I have bankers that are seasoned, that have been here for a long time and have been through, 2008, which was one recession. And then I go back to Y2K, 1999, the calendar wasn't going to click over and everybody's banking was going to be gone and their money was going to evaporate and fill the bathtub up with all the hot water. So we've been through some things a little bit, right? And so I would just say that this is definitely a time, trust your partner, trust your bank, the environment that we're in. You don't have to hide your money in the mattress. That's scary, but we're here to help and bring you along the way. I think that a regional bank gives you that point of contact to be able to deal with people. I think that the more technologically savvy that we become, the more businesses want to deal with business owners, business bankers, people connecting with people, not a 1-800 number, not getting lost in the shuffle, at the same time progressing with the technology. So there's this weird connection that we have to make and balance that out. But bankers aren't, it's bad, but I think like the big, hairy, or whatever, white guy in the suit that can't relate to me and I need to, this is what we look like now, here I am, and so we're more approachable and it's okay to ask questions and no one's going to steal or take from you or steer you in the wrong direction. You just got to connect with the right people.
I mean, I think what you just said right there is like just most people don't even understand how to walk in, even to the point where if you like, I know a lot of businesses that need loans, for example, specifically on industry, like you get this big account. Oh, now you need vacuum backpacks. Now you need big equipment. Now you need
Mm-hmm.
payroll. Now you need to be,
Mm-hmm.
because you got net 30s, net 60s,
Mm-hmm.
on the
Mm-hmm.
payment. Now you need to have
Yeah.
some cash in the
Mm-hmm.
bank, some loans. Like, so the fact that again, bankers should be or are more approachable now, quote unquote,
Mm-hmm.
right? I think you're right. I think we still think that bank equates to bad
Mm-hmm.
or something like that. Let me
Mm-hmm.
ask you a quick question. How does someone listening to this that might want funding, how do they start noticing, one, if they need it? And two, how
Mm-hmm.
do I prepare myself to
Yeah.
make sure I get funding? Because I'm sure if I just show up and tell you I need 300,000, no. There's
And then
actually
I
a
tell you,
process, right?
yeah, then I tell you no, and then you get mad at me and say, see, I hate banks. That's the
Yeah, there you
problem,
go. There
right?
you
And so
go.
you're like,
Yeah.
no, like it starts in the beginning, right? It starts. So I have been in the banking long enough I work with startups right out of registering your business name with the Secretary of State, get it registered moving forward to the large companies that have sold now for, $60 million. So I've done everything kind of in between, but it's one thing to be bankable, and then it's another thing to be lendable, right? And what does
Ooh.
that look like? So anymore, the banker, the accountant, the CPA, the tax advisor, and or depending on your complexity, the attorney is all sitting at the table at the same time, because there are things that we need them. We have our accountants, and we love them, and our CPAs, our tax advisors, they're great. But as a business owner, they set you up so that you don't have to pay taxes, right? You don't want to show the income. You don't want to show the gains. You don't want to show that you're making money, because then, God forbid, Uncle Sam comes in, 38% tax bracket. Nobody wants to do that. So they're our friends and we love that. But the problem is then you come into a bank and you say, I need a $300,000 loan. And you show me your financials and I say, you don't make any money. And you go, yes, I do. I'm a business owner. I have all these vacuums. I
Yeah.
have all these corporate accounts. I have all these commercial. Of course I make money. I said, yes, but your accountant doesn't show that you make money, or what we like to call a net profit, right? And so whatever you're making at the beginning, minus your expenses, plus your retention, is your net profit down there at the bottom. And that's the number that I need to be able to show that you can pay a loan. That's in kind of like basic layman's terms. But so where I come in is helping you from the beginning to get you going, so that when you do come to me, we don't just throw spaghetti on the wall and go yes or no, but you want to know the why behind it, the how do I get there? I want to buy a building in 2 years. I want to, and then we keep growing from there.
Man, I think there's so much to unpack there, and I think there's so much value there. So I'm going to start with my original question I had before that answer, and then I guess I have a question based upon what you just said.
Mm-hmm.
So I love the term you just used. Is your business bankable or is it lendable?
Mm-hmm.
So I'm going to have a question about that. But
Mm-hmm.
before that question, I'm curious, like, high level, how you see businesses use a bank relationship or a banker, let's call it,
Mm-hmm.
for business growth. Like, so we use our CPA as an asset to save us money, right? We
Mm-hmm.
use our marketing company to help us grow our business.
Mm-hmm.
I've been in business for 10 years, and I've actually, and maybe this is ignorant of me, but it's just honest, I've never used a bank as an asset to help grow my
Mm-hmm.
business. What are some
Mm-hmm.
ways someone listening here is like, I don't have that relationship with my bank.
Mm-hmm.
How could I develop that, or why should I? And how do you guys input yourself to like help them with growth?
Yeah, and so the basic point of where you start, it would be like a line of credit. Sometimes you start a business credit card. I think Angel had mentioned that earlier when we were talking offline. But a business credit card gets you started because when a business is just starting and doesn't have any credit, it's your personal name, your personal credit, your personal background that is kind of backing. And so when they say no credit is good credit, that's kind of the first step of establishing business credit, because you don't have historical financials. You don't have a huge business plan for projections for 2 months out. And so here you are. I pay my car payment. I paid my mortgage. I paid my rent. I stand alone. And so a business credit card, because it's unsecured and it's higher interest rates, is usually you can get your hand on a gas card. You can get your hand on some sort of Visa. high yielding credit card. That's usually where a business will start. When you want to look for that growth trajectory, we're looking at increasing cash flow, right? So now to your point on had before, where you've got 30, 60, 90 days in paying and revolving and what your ARs and your receivables are coming in, you're like, well, how do I make payroll in 30 days if this client isn't going to pay me until the job is complete? And so then I don't get that income until 60 days, but I got to keep the cycle going. So that's where a revolving line of credit usually comes in. And we establish together with the business owner what that looks like. I think we always go big or go home, right? Let's knock it out of the park. I'm going to ask for 500,000. And I'm like, no, you only gross $100,000. What are you going to do with a $500,000 line of credit? So then we back into that on what that looks like. Maybe a $25,000 line of credit looks more realistic when you make 100,000. Maybe a $100,000 line of credit looks more realistic when you make 250,000, and you go up from there, so on and so forth. But we just back into that number. Then what happens is the exposure amount, when you're looking at a bank to underwrite it, it looks like if you have a credit card for 15,000, a line of credit for 50,000, a car payment for this, if you were to maximize on the exposure of all of those, can you support that debt with the income that you're bringing in if you're making all those payments? So if anyone has ever experienced where if you're buying a home, let's just say, and they tell you have to close this credit card, you have to close that down in order to qualify for this larger piece of the pie, it's because they have to underwrite it to, if you were to go and maximize on all levels, could you actually support this mortgage payment on its own, right? And so that's kind of, we back into the number and then try and grow from there. But you would utilize it, James, to your point on increasing the cash flow, keeping your cash on hand so that you have some liquidity, right? Because if you have to make an insurance claim, the water heater goes out and you have a $5,000 deductible, cash on hand, you want that. And so then you use the bank to help you retain your money and to help you grow and keep the business cycle going.
Well, I think like what you just said right there. So like if I'm a business owner right now listening to this, I'm like, so revolving line of credit, interesting. So it's not a revolving line of credit. I think some people think of credit, use it when you don't have money, right? Like when you can't pay it with your cash, but it's actually like if my payroll is $20,000 a month, and I know that that's my payroll, and I know my client, I get paid right after that or right before that, I could use my revolving line of credit just to be safe in case, God forbid, something goes down that I can't then make up my payroll, right? But it's almost like how you should use a personal credit card, right? Where you like use it, pay it off, use it, pay it off. Is that the same idea with revolving line of credit so that you could basically like keep like you said, keep cash in hand instead of always using cash to do everything and then you just supplement it?
Yeah, you're spot on, 100%, Angel. See, look at this tutorial; it's already working.
Well, I'm over here thinking like, why don't I have a revolving line of credit?
And so that's exactly, it's for that. Keep the business going. Payroll is on the 15th. You don't get paid until the 30th. Pay the payroll. You get paid. Pay that line of credit down. And it's exactly for that nature. Where we get caught up and we get stuck is that we end up using a line of credit for long-term assets versus short-term revolving. And so a business owner will say, I've got a revolving line of credit because maybe the payment structure is a little different since it's interest only. And then they use that revolving line of credit to purchase a tractor or to purchase the vacuums or whatever, to your point that you said, the truck. And now you have a loan on the line of credit that you need to pay principal and interest to and revolve it to keep it going. And so then you're not using the line of credit accordingly. You want to keep those separate. If you need a term loan over here, 5 years, the same way you would buy a car, a 5-year, 60-month term, principal and interest payments, we use that for long-term assets versus the revolving is for short-term funds and cycling.
I just want to go find a way to do business. Interesting. So that's the kind of the value of banking, right? Like, so I can come to you and say, look, Eli, this is my projections. Walk us through the checklist that I bring you, because I think I'm about to hit on a few, but I'm assuming I would bring like, these are my projections. This is what we did for probably my last 2 years of what I've been doing, if I have any, right? And then contracts that I have, things that like I can prepare to let you guys know, like, hey, look, money's coming in, this is how much is coming out, and this is what do you guys then strategize with us to figure out what we need, or do I come and put in a request for what I need? What does that usually look like?
There's both. And so it just depends on that benchmark, right? So any business, the first 2 years are the most important. And that's kind of like the stamp that you need, right? If your business makes it after 2 years, then you've kind of gone through your business cycle, because those first 2 years, that first year, number one, but then making it through the second year and hitting gold, basically, right, is where we like to usually see 2 years in history. Now, that said, that's for conventional lending financing. And so with that, then we do look at your historical financials. So that's whether it's your QuickBooks that you're keeping a tally on. We have a P&L and balance sheet usually once you're starting to make some money and things, and that just shows your expenses, your liabilities, your assets, your profit, right? And then that balances in and of itself. So the 2-year mark is kind of like the sweet spot of conventional lending. Or if we're going to use the Small Business Administration, so the SBA, which is kind of like government-backed funding. It's more of like an insurance cushion for the bank. They feel safe, we feel safe. Let's partner together in the event of default, right? So a bank credit officer and risk officer is going to look at doomsday, where me up front, I'm looking at, they're great. I want to open up the ice cream shop with them. Like, this is good. Let's go sell donuts, right? Like, this is what I want to do. So there's a balance in that. If you're a first-time business owner, you just registered, you're getting started, you're transitioning, those are usually self-funded, like I said before, with like the credit card, or we have the SBA that lets you do startups. So in funding startups, you have a location or you need some working capital. That's where you come in with your business plan, your 1 year and your 2 year projections going forward. This is why I think you should lend to me. This is the demographics of who I host, who I take care of. These are the business contracts. This is what I have on hand going forward. And so then we get the SBA to back it and we show them and we move forward. And it just depends on if we're at, do we need 10,000? Do we need 25,000? Do we need 50,000? Are we buying a building? And so all of that we set up together. And that can be in the initial appointment. Tell me what I need to bring to you in 6 months so that I am lendable versus bankable. We like to see, as a regional bank, we like the relationship all in, because then if you've got your business account with us, we see the assets that are coming in, and then that helps your story and backs you up with, yep, he does deposit every month, every 2 weeks, every day. He closes this business. The merchant accounts, they accept Visa, that comes into the account. And we start seeing the cycle of your business to when all of a sudden you need a line of credit. We back it up and go, yeah, absolutely. They're lendable. This is what they have.
Man, okay, there's a lot to unpack there. And I want to say, if you guys have questions right now, just listening, just remember, Ellie's going to be at our conference here in September. You guys are going to have full access to that roundtable. And I think it's a underrated topic just in business in general, but definitely this industry. I mean, obviously, I'm uneducated about this topic. I just want to sit at this roundtable on a personal level. So if you guys have questions, definitely check out Ellie at that roundtable. My question is, we talk about being bankable and lendable. Mm-hmm. I've never viewed businesses in that way. If someone's listening and they're like, okay, am I bankable or am I actually lendable? Like, what's the threshold there? What's the differentiator? Mm-hmm. And just kind of walk us through those two definitions.
Yeah. So bankable is, I've got a business, I'm established, I have an EIN number, Secretary of State, which is separate from your Social Security number, and I've opened up an account and I'm starting to make deposits and I'm paying checks, I'm doing, direct deposit, ACH, payment invoices. That's just having a bank account. So you're bankable. The bank's going to take your account. You're not asking for much. We're offering you a service, and here we are, right? So that makes it to where you're going to keep things in line for your accountant or your CPA and say, here you go. Here's my bank statements. Make it the tax, the tax reporting, right? And so that's the first stage. Where we see the difference is small business owners and startups, they start doing everything just under their personal name and putting everything and what we call like commingling of the funds, right? So they just put everything in their personal account and they pay everything out of there and they don't separate the two, and there's not clear swim lanes. So we don't know what's your spouse's income, what's the daycare, what's the actual business contract, it's all just in one pot. and they keep it simple, right? Instead of registering and separating the two. And then, once you get to that point in registering, you want to keep it. Whether you're going to put everything in the business account and transfer it to your personal account, great. By all means, do what you're going to do. But at least there's a streamline of what's going in for the business, what's transferring. I pay myself. I have expenses. I do fuel. I do gas. I do whatever all through the business, and then I transfer it to pay here. The other avenue is like single member LLCs or sole proprietorships. They will set up, say, a savings account because they're 1099 and they don't pay taxes when they're, or deduct for taxes. And so they take every check that comes in, they'll take 20%, 30% right off the top of it, and then just put it in the savings account. Because at the end of the year, if they're going to owe taxes, then they have this little nest egg that's already accumulating, and building maybe some interest or whatever to pay your taxes at the end of the year. And so then as we start, that's just being bankable, that you've got the debit card, you got a credit card, you're paying your bills, you're bankable. Now, lendable is where you're like, what are you showing me with your profits? Where's your net income? Are we making money? Can I pay this loan? Is the difference between the two.
All right, hang with me for the next minute and a half. We got a quick break here in the Profitable Cleaner because we're officially official. It's like I like to say it. Why? Because I get to take this break and introduce our sponsors. First sponsors is USource. So go to usource.com. That's usource.com. This is a business management platform for facility services companies. No more chaos, unnecessary admin work, or just having to consolidate information. This is about you not being the source of information anymore and having a platform that can give you the accessibility, visibility, and control over your operation. So see more, do more, whether you're 1 employee or 3,000 employees, this is the platform for you. So check out our sponsor, usource.com. Our second sponsor, dayporter.com. They will help you with all your outbound, LinkedIn, email, call, and they're going to do it with a team from Latin America. So make sure that you reach out to them, dayporter.com. They can help you hire your next superstar and give you the strategies to go book the walkthroughs that you're looking for. The third one is going to be Melgar Consulting. That's alexmelgar.com. If you're hovering around the $5 million range and you're in the facility services industry, want to hit those 20, want to keep bumping your head and really want to scale, he is going to be able to consult and help you have the right foundation, the right structure, and the right strategies, and the right advisory and consulting to get you past those 5 to 20 million. So go to alexmelgar.com. And last but not least, our fourth sponsor, cleaningprofits.com. That is our annual event for facility services, CEO, executive teams, leadership teams. Bring them out. This is all about transformation. It's all about training. It's all about community. And it's held once a year, this year, September 12th to the 14th. So thank you once again to all of our sponsors. And let's continue on to the show. I have a question. We keep talking about net profit, and obviously, I mean, and I don't know if this is where we want to take the conversation, but my brain goes here. So my brain is, okay, well, I don't want to pay taxes. Like I want to pay taxes. I just don't want to pay that money taxes, right? I still want to be a good old good old American and pay my taxes because that's just part of the system. But I want to get tax credits. I want to try to move my money so that I can keep it versus the government. So here's a question for you. We keep saying that in order to be lendable, net profit is one of the best markers, right? One of the best metrics to follow. How do you balance the game between, well, my CPA wants me to have like this savings account and be prepared to taxes and make sure that I don't, but then my tax guy is like, yo, let's get access to all these tax credits. How does the bank play a role there? Do you guys guide us well in maneuvering that relationship? Like, hey, your net profit says 3%, or how can I get it to say 10%, but take tax credits instead? Like, do you guys help with that portion? Because I don't think there's a lot of education on the strategy of the maneuvering of finances to still look bankable and lendable, but still not have to pay an arm and a leg over here.
Yeah. And so that's where that relationship is intricate, right? And what we do with the business owner, if I'm not talking to the accountant or the CPA. So in basic elementary school, my dear, right, is for every $2 that the business makes, do you save one? Do you spend all $2? Do you go into the red and you're negative $5? Or are you net zero? So your net profit, right, is this is what I make, this is what I spend, this is my take home. The same way with our payroll, right? This is our gross minus all of our benefits and health insurance, taxes, state, all of that. And then this is what my take home is. So the net profit is basically the take home of the business. Now, if you want to see if you can afford the loan, it's literally, we call it a 1.25 debt service. And so then that's really getting into the weeds, but a debt to income ratio is what most people are familiar with. And so for every $2 that you make, do you save one? That puts us immediately at a 50% debt service coverage, like debt to income ratio. So now, can you, with this $1, afford the loan that you want over here to pay? With that $1 and your living expenses that you don't account for on your day-to-day, your grocery bill, your gas bill, your whatever, your cell phone bill, can you pay that with your net proceeds, right? So then for every $2, did you save one? Or for every $3, did you save $1.50? For every $4, did you save $3? And so now you're increasing that margin on what you have to service the debt that you have.
Quick question. Sorry, you keep saying groceries, you keep saying living expenses. Are we talking about personal loans or are we talking about business loans?
I'm mixing both, right? Because a lot of people can relate. A lot of people can relate to the personal side because that's what you've done. And so then when you do the business thinking, you take both into consideration. This is how it works on the personal side. And my business is different because I can expense everything on a business, which shows me net negative, right? So if I make $5 and I spend 10, I'm negative $5. But it works on a business because now I don't have to pay taxes because I'm negative, right? But when you bring me negative $5 to a bank, I go, you don't have any money to support giving you a loan. So that's where the happy medium comes out. And so what we like to do is say, as a business owner, if you make $2, are you saving $1?
Gotcha.
Period. If you make $4, are you saving $2? That is a basic minimum of like a 50% debt to income ratio. Income you're bringing in, debt you're spending, the divisible gives you our 50%, right?
And real quick, I'm just turning this into a personal coaching session, I think. So when you say like if you make $2, are you saving $1? Is that $1 a dollar that I'm saving so that I have it in savings, or is this what I'm putting away to prepare myself for taxes?
No, the dollar that you're saving is just your net income. So can you support what you're asking me for in order to pay this loan? So if we use larger numbers, so that's me just using basic, right? So
let's say that I have 300 employees and I do 5 million a year. Like let's talk, because the people going to the event, those are going to be it, right? Like I want to talk to 10 million, 20 million. Okay.
Perfect. Yeah. And so I can go that route too. So depending on if we're the startup, and that's the difference of being bankable versus being loanable. So now I have the business owner who makes $11 million a year, $1 million a year, $15 million a year. They are the more sophisticated borrower and owner because they're probably already dealing with an accountant and a CPA. And so now it's just a matter of what they're showing in their net profits to be able to service the debt. We typically look at gross annual revenues for, say, a typical line of credit for a conventional lender. They've been in business more than 2 years. They know what they have going on. A line of credit for a conventional, traditional, in business, seasoned, let's say, a business owner usually runs about 12 to 15% of their gross annual revenues. So, if they're making $100,000 a year, GAR, $1 million a year, we take 12 to 15% of their gross and we back into it and say that's a reasonable line of credit. But they have to be able to then support that with their net, because their gross and what they deduct in expenses, and if they don't show what their net is to be able to support $1 million line of credit or a $500,000 line of credit to make that payment of a $100,000 line of credit is usually about a $3,000 payment amortization, because the bank maxes it out as if you were to draw the whole 100,000 and they amortize it, which means the payment plan is of 3 years. So you have to be able to support a $3,000 debt payment on whatever your net income is. Am I getting a lot into the weeds?
I love when we get into the weeds, because now finally my brain officially plugged them all in together. I
Yeah.
love how you said it. If you make this much, we're looking at 10 to 15% of growth, and then you got to make sure you can show that you have enough profit, not to
To
pay it all
support
off in
that
one
payment.
year or two, but just to
Yeah.
support the amortization of the loan. To me, that makes
resonates
a
with you.
lot.
But
Yes, thank you,
also,
thank you.
again,
I
you're an
get it.
established business owner. You've been in business, so you kind of know what you've been doing for a minute. And so then, again, that's a very different conversation than talking to the startup owner. So
Yeah,
there's the experience and runs the gamut of what I do, right? Because I need to know
yeah.
the audience, right? And so every business owner at the roundtable, it may be on different life cycles of their business. And then we're here to help with all those life cycles. Also to the point of conversion, where if you have a 100% business owner, God forbid, something happens to you, who's going to run your business? Who's going to get it? Does the business just go up in smoke? Who's the successor to your business owner? And we help with that planning as well.
Really? Does that go into succession planning? Is that what it is, or is that something separate? Yeah, that's
It's
something. Okay, that
succession
works.
planning of your business. Who
Of
takes
the
over if
business.
you're 100% owner? Are you going to leave your debts to the people behind you that you've left behind? Do you have a life insurance policy that covers everything for your business? Not a life insurance policy that covers
For your
your home and
business.
your mortgage and your personal. Do you have a life insurance that covers your business in the event, God forbid, something happens? Who's going to cover all that?
I have another question for James. James, have you ever thought about it like that? Have you
I've
ever,
never
like, for
actually.
the business? Like, I know I have my life insurance. Like, if I die, my wife, I don't tell her the amount, because then I have a feeling
Yeah,
that
then
I
all of
might
a sudden
just
we're like, what
disappear.
happened to
Yeah,
Ayam? Where did
yeah,
Ayam
exactly.
go?
Where
Oh,
no, they send them back to Mexico. They just
yeah.
make
And
myself
she's like,
disappear over
one,
there. Yeah,
two.
yeah, yeah. Exactly. That's why I'm like, hey, buddy, I don't say those, but there you
Yeah.
go. Sound effects. James, have you ever thought about the business part? The
I've never
business.
actually even heard of like life insurance for your business. So this is like a educational session for me. Obviously, like I have all the personal umbrellas you can imagine, life insurance you can imagine, all of that. It's kind of funny. So I have like umbrellas on rental properties and things of that nature. But when it comes down to like our personal business that Angel and I do, no, I've never even heard of that. So if you're
It's
listening to
called
this right now,
it's it's called Key Man Life Insurance. And so Key Man Life Insurance is I'm the business owner,
I
I'm
love this.
100%, and if something, God forbid, happens to me, who's covering the debts?
What
Who's
about
covering, like,
partnerships?
who do we put that on? Partnerships is an equal, right? And so when we're setting these up, like my disclaimer is I'm not a CPA and I don't play one on TV, but I've worked with enough of them to know a little bit about what the lingo is, right? So when you're setting up and establishing a business, you would work with your CPA and your accountant on how to register. Are you an LLC? Are you an S Corp? Are you a partnership? Are you a C Corp? And what that looks like, right? And so again, to your point, we have the business owner that's already established making his millions. Hopefully he already knows where he is, but that's the person where it's like, you've got this business that's running great. If God forbid something happens to you, then what?
I guarantee you, a lot of people listening to this have
interesting.
no clue that there's a thing like that, and this is not even succession planning. This is just ensuring that everything that you're doing is gonna stay
To
afloat,
your
basically,
business.
when you
Yeah.
leave.
You've worked
Yeah,
I
so hard. This is your
that's
life. This
wild.
is your bread and butter. This is so then what happens? Who takes on the burden or who takes on the greatness that's continued, right?
Totally. I also want to like encourage people listening too. Like you might fit both categories in a way. Like I know for a fact, we just know him personally, and a piece of we're almost like a little bit of both too. Like you might make good revenue and be $1 million business, and also know none of this, and that's okay
Yeah.
too. That's why it's
Yeah.
good. It sounds like
Mm-hmm.
to have an Ellie there, a Vectra
Mm-hmm.
bank,
Mm-hmm.
just a banking relationship, because I know that there's a lot of people here that do multiple $1 million in revenue because they're go-getters, and they still might just be rocking it. I'll call it the old school way, or maybe
Yep.
they're just not as savvy as they should be just due to
Mm-hmm.
lack of knowledge. So if
Mm-hmm.
that's you, that's the reason why we want people access to people like
Mm-hmm.
Ellie. So
And
I'm
that's
hearing you
okay
talk.
because I mean, and then that's 100% okay, right? Because let's just say I love donuts. I eat donuts. I like them with sprinkles. But does that mean that I can be a donut owner? Does it mean that I'm the baker of donuts? Does that mean I have the artistic talent to create the donuts or the financial wherewithal, which is why you surround yourself with a team, your banker, your partner, your CPA, for them to, the attorney, whatever, to help you make sure that you have that, you're the nucleus, and then we build around you to make sure that you're running correctly, that you are paying your taxes, that you do have cash flow, that you do have succession life planning, like all the things that go into, because all I know is I do donuts very well, right? Everything else, figure it out. And we learned that with PPP, where business owners, the SBA and the government would not deposit into the account unless the beneficiary, which is the account name, did not 100% match how they were registered with the Secretary of State. That means that we had a business owner that was saying, I am ABC doing business as, or I'm ABC Corp, or am I ABC comma LLC? Am I uppercase? Am I lowercase? And they didn't know how they registered it because it happened so many years ago. I don't know. Somebody else tell me. And then you open up the account and you just don't know what you don't know. And until we were there to figure it out, right? Then it's like, oh, it is capital A, lowercase LLC. And so there's things that business owners, we're off to the races. We're running. We're doing what we do. We do it well. Everything is happening. We're doing great things. But then for somebody to sit down and say, you can add benefit, value, save money, save time. You don't do it the old school way. We've got payment processing. There's so many different things to do today for business owners that maybe you don't know is at your fingertips.
I have two questions, and then I'm sure James has that. Unless you have additional one, I know for a fact you're all set up over there. I have two questions. I'm scared to ask one because I have a feeling it'll take us on a tangent. But
Uh-oh.
yeah, I know. It's gonna be a good question. It's a good question. I'm sure like some people right now. So I personally think, and I know I'm a big advocate of like banking relationships and loans and revolving credit. Like use what you got access to, especially if you work so hard on building the business that you have. Now, with that being said, you got to be educated. That's why a relationship works, because I could also see myself making a mess. With that being said, here's a question. Let's say our business is going to do 2 million bucks this year, right? Got good profit margins. We're good to go. Would you recommend, like, if you can, would you recommend get a revolving line of credit, get a line of credit, and have everything prepared to get a loan, regardless if you're going to take advantage? Would be my first question. And then two, does that get impacted right now based on the recession that we're in?
So two-prong, right? So the best time to ask the bank for money is when you don't need the money. Clue in on that, right? When things are
That's the best way to answer that.
when things are going good and you think you don't need it is when we're going to lend. Then you're going to come to me because you're like, I didn't need it. And now the sky is falling. A contract, things are sitting out in those big old drones on the Atlantic Ocean and product isn't coming in. And I have contracts to make and I don't have my goods to sell and all of this stuff. So you're like, nobody's paying me because I don't have the product. I don't have the shipment. I don't have the material. I don't have the 2x4s. I don't have the cleaning spray. I don't have, all that is sitting out there. Now what do? I still have payroll. I still have this. And now you're coming to me because you're like, I need my help yesterday. And I'm like, Angel, I tried to tell you a year ago, you need this. Let's go. We didn't know. And then now, so the best time is usually when the thing is good and you don't need it, or you might use it. You might need it, whatever, but at least it's there.
Because it's not mandatory to use it, right? Like people, if you get a credit line, revolving line of credit, anything, you don't have to use it. I mean, a loan is a little bit different because you're getting that cash up front and then you got to, I mean, you could just give it back, but that makes no sense. But okay, gotcha.
But there is typically everybody forgets that a bank is not a nonprofit organization. We are for profit. Chick-fil-A didn't make its money by giving away chicken sandwiches, right? So there is to maintain that line of credit, keep it on our books, redo the filings with the Secretary of State to make sure that everybody's still in good standings. Like there's a cost. It's usually whether it's $50 a year on the anniversary or $99 a year on the anniversary, it just depends on the product. But just know if it sits there, there is an annual fee that usually occurs. Okay.
But with everything going on,
Sweep that
let's
under the
go
rug,
back.
but just
Last question for me. With the recession that we're
Yeah.
in, or
Yeah.
things kind of people are preparing. Is this still a good time to ask for a revolving line of credit loans? Like, would you recommend them? Actually, you answered my question. Would you recommend them getting it now before it fully hits, and maybe you start losing some contracts so that you have credits available?
I would say that what we learned from 2008 was, and that was the recession, right? A few years back, was unsecured line of credits by a business owner were the first to go into default because they ran away from those quickly. An owner, or to keep the household safe and solvent, like they would pay for the kids' soccer program or gymnastics, or to make the house seem like we're still functioning, and they let those business line of credits go because they're like, oh, I got to pay for this versus this. And so during these times, I would say that we maybe wouldn't lend the whole cake, right? But we might do half of the cake, piece of the pie, and get you started in the right direction. But somebody walks in and they want a $500,000 line just because I want it. The bank may go, well, we'll give you 250 versus the 500 just because of what the exposure does, right? And what that does. So we may have tightened our belts a little bit, but we're still lending. There's still business to be had. People are still buying buildings. People are still needing workflow, capital. This is where the importance of knowing your banker, having a relationship with them, calling them, Ellie, it's a rainy day. I lost this contract. Let's talk through it and see what we can do and how we realign ourselves to make sure that your business keeps running.
Or the other side of it, right? Which I'm assuming is like, hey, Ellie, there's a few businesses that I can tell are gonna go under. Can I afford to take some? Can you help me get some cash so that I could go buy some? Right? That could be the opposite of it.
Where there absolutely where there's loss, there's usually gains too, right? People benefit from other people's hardship. And then we're in a place where people are selling their businesses because they don't want to go through a COVID again. They don't want to, they figured like, I waited through that stress. Let me just let somebody else run with it. So yeah, but I like it because they may call me and go, hey, Ellie, what do you need? And I hear that a lot.
I'm looking at my bank. I'm looking at the numbers
Ellie.
here.
Yes, exactly. Yeah, 100%.
I do have one last question. Sorry, James. I know you have the actual last question. Why'd you decide to be a roundtable leader? Let me ask you that. So, like, I know we've been looking for it, and then obviously James told you a little bit about it, and I know that there was like mutual passion and excitement. I could already tell you get super excited about this. I just want to like sit with you and talk numbers. But why do you want like doing events like these, specifically cleaning profits? Like, why do you want to participate?
We were connected. We were connected by a mutual friend of a friend type thing. One of my counterparts, Jim Freeberg, works with someone that James knows and brought us together on what this would look like for the roundtable. And it fit your outreach and demographics fit more of the wheelhouse that I'm in as the director of business banking. And so Jim thought, oh, let me introduce them to Ellie, and Ellie met James, and that's how we're here. But why I like to do it and why I'm so passionate about what I do is because I am also the co-chair to our minority forum here at Vectra Bank. I think that eyes wide open and everybody learned a lot during COVID and post George Floyd and diversity, equity, and inclusion. And there's a lot of unknowns that are still out there that people don't have the resources or don't know how to get the resources. And so if I can be a voice of reason as a Latina female in this business banking world that is typically male driven and most specifically white male driven, I want to help pull along the folks that I can help and teach them and show them and, give them the guidance of what it looks like to be able to play with the big dogs, right? And be at the same table and know that it's okay to have a voice in that table and grow your business and not feel like I can't do what he does. We are all in this together. And so, that's why I'm here for sure.
I need to stop. There you go. I need to stop talking too, because now I'm wondering
get emotional.
Is there what's the right word? Is there incentives for minority-owned businesses when it comes down to doing relationships with banks like yours, like regional banks and stuff? Like, there's actual programs for that? I sound so ignorant right now.
No, there's actual programs and more programs that we have our hands on, depending on if it's like the micro business versus the more sophisticated business. Oftentimes you feel like it's just checking the box because the SBA program has benefits also in funding if you're a minority owned business, BIPOC, right, or women owned business or a veteran business. And so that is showing kind of the credentials, and some swim lanes may or may not open to you, but under traditional lending guidelines, there are some opportunities where we'll allow for a larger, debt service coverage, debt to income that maybe isn't down to what we would do in conventional. We may open up that floodgate a little more when it comes to having higher leverage and different things that we would get into depending on what they're looking for. So opportunity is
Okay, I'm
definitely
done.
at our hands.
Sorry, I'm done. But I know a lot of
Gosh,
people listening
Angel's
to
like
this.
taking
It's like,
over, James.
I know,
Angel's
woman
taking over.
owned and Hispanic. I've been
I'm here to
I've
help.
been like having this weird itch about building the relationship with like a bank, and so that's why
Yeah.
I know James got to talk to you like separately. That's why
Yeah.
I think I kind of took over. My bad, man. I didn't.
No, not at all. No,
Fun.
I love the energy. I love the passion, and I can hear and feel the expertise. So I called Angel right away, and I was like, we got Our Lady. So,
That's awesome.
and we go back and forth with like roundtable leaders all the time. Like we have them solidified now, but we should have had like a draft board. We were talking football before this of like roundtable leaders and speakers. It changed like 20 different times before we even like talked to, and then we talked to people and it was, maybe not, maybe next time. So we knew we had the right gal when we spoke to you. So I'm glad that
awesome.
you two
Thank
connected.
you.
All right. So we end the show on one note. Question roulette. It's we have no idea what questions come out of this box. Anything and everything.
Super. Is it personal or business? Is it as it relates,
Depends.
or we just don't know? Okay.
No
It
clue.
depends. It totally depends. So are you willing to play?
Yeah. I wish I had like the alcohol where it's like, can I drink if I need to?
No,
Or
right?
do I,
No.
Okay.
It won't be like a never have I ever game. So it's okay.
Okay. Good.
It'll
All
be
right.
okay.
Yeah. Let's roll. Let's roll the tape.
We actually don't know. So far, the questions have been pretty nice, friendly, but we don't know. And once we ask a question on the show, we throw the card away, never gets asked again. So
Okay.
here
Perfect.
we go.
Let's do this.
James.
Oh no.
This is so fitting. This is so fitting.
Oh my gosh.
Have sound effects.
this is
Sound effects ready. Let's see.
This is so freaking fitting for you, Ellie, because you're in the banking world. Because it's a professional question.
No way.
Okay.
What are your thoughts on cryptocurrency?
That is crazy.
Asking a banker their thoughts on cryptocurrency. I love this.
It's so interesting because I think in the banking world, we're still learning a lot. The insurance is not there behind it. It's a scary, volatile place to be, but we do have to keep up with the world around us also. I learned quite a bit from my son. He's 23 years old. My daughter, they're in that millennial or what's Gen Z world. And so that's kind of the future of what they think is supposed to happen. Conventionally, I think that maybe there'll be a mix going into the future. I think there's a lot to learn. I think the risks are the risks, the highs are the highs, and the lows are the lows. I think with anything that you're going to invest in, speak to a financial advisor and what that looks like and take a look at what your risk appetite is. I think that maybe the younger generation that has the future ahead of them, maybe they can take the higher risk. My generation may be a little bit more conservative, and then the next generation of our parents will be even more conservative because they have a lot more to lose on that back end, right? And to pay your bills. So don't put all your eggs in one basket ever in anything. Diversify and learn. Don't get caught in fraud. There's a lot of fraud behind it. Just make sure you know who you're working with, what you're investing in, and be safe out there. Fraud is high. That's another thing that we could probably spend the next hour talking about. But
100%.
Again, technology and with AI and what's happening and the hacking of your systems as a business owner, and your office manager thinking that she got the invoice from the guy that you just did the contract on, she pays it, and then their system got hacked, and now you're out several $100,000 or whatever that looks like. Like, technology and firewalls and security is definitely another Oprah to talk about. Another
Making me
Eli
wonder.
Stanley.
Making me wonder if I should should we invest in like stocks for IT and security companies? I have a feeling like my
That's
friend has
insider
told me
trading.
so.
I don't know. I don't know. I don't
Yeah,
know. I can't
no,
talk
no,
about
hey,
it. I
hey,
don't know.
hey, hey, what's going on here? Just kidding.
That's a
No,
hey Ellie. Hey Ellie.
hey, yeah, yeah, yeah. So I'm starting. I have this money in my bank. No, I'm just kidding. No, honestly, Ellie, ha sido un placer tenerte en el podcast. We're super excited
Oh.
to have you in the event. As you guys can tell, full of information. And I know for a fact that if I put you in a room in front of a CEO that makes 100 million, 50 million, 1 million, 500,000, you'll be able to hold your own, have conversations, and provide value regardless. And like you said, Vectra Bank is Colorado, but you guys have sister companies everywhere. So you guys are basically like you can cover them anywhere. So anybody going, you guys should be able to be covered by their sister companies. So Ellie can make an introduction. Once again, Ellie, thank you so much for being in the Profitable Cleaner. We feel honored. We feel blessed. I definitely took over with the questions, but James asked the beautiful, beautiful questions throughout. We're super excited to have you, and we'll see you in September.
Thank you. Me alegro en conocerlos. Adiós. We'll
Mucho
see you in
gusto.
Nos
September.
vemos.
There you go.